We are gearing up for our next big webinar on entity structuring, and we've already received some great questions that we can't wait to surprise you with by getting them answered today. If you're a business owner or a real estate investor and not familiar, entity structuring is a crucial part of building a strong financial foundation. The right structure can protect your assets, reduce your tax bill, and position your business for long-term growth. Question number 1. I have an LLC. Does that automatically save me money on taxes? Nope, not by itself. An LLC is a legal structure, not a tax status. By default, single-member LLCs are taxed as sole proprietorships and multi-member LLCs as partnerships. The IRS doesn't treat them differently unless you elect S-Corp or C Corp status. So without the right election, the tax savings might be zero. Question 2, should I switch from an LLC to an S-Corp? It depends on how much you're making. S-Corps can save self-employment tax once you're netting about $50,000 in profit. But you also need to run payroll, file extra forms, and stay compliant. The savings are real, but the headaches are too if you're not ready. Question 3, do I need a separate LLC for each property? This is a question for real estate investors. Not necessarily. From a tax view, multiple properties in one LLC is fine. But for liability protection, you may want to separate high-risk ones like flips or short-term rentals. Consider a holding company or series LLC if you want separation without overcomplicating your taxes. Question 4, what is the difference between an LLC and an S-Corp for taxes? The big difference is payroll and self-employment tax. LLCs pay full self-employment tax on profits. S-Corp lets you split income into salary, W-2, and dividend distribution, which can lower your tax bill, but only if you do it right. Think more tax forms, more savings, more rules. 5, I'm a freelancer. Should I be an S-Corp or stay a sole proprietorship? Sole proprietorship is fine to start. Once your income hits $50,000, it's worth looking at S-Corp status to reduce self-employment tax. If you're making less, it probably won't outweigh the extra cost of payroll, accounting, and administration. 6, is C Corp ever a good idea for a small business? Sometimes, but not often. C Corps pay corporate tax, 21%, and then you pay again when you take money out, double taxation. But they work if you want to reinvest profits, offer fringe benefits, or attract investors. Not ideal if you're taking all the money home every year. 7, should my spouse and I co-own the LLC or keep it solo? Depends on your state and goals. Some states let you treat a jointly owned LLC as a disregarded entity taxed like a sole proprietorship. Others require partnership tax filings. If you're in a community property state, joint ownership can still be simple, but you might also want to consider keeping it in one name for simplicity or liability planning. 8, can I have both an LLC and an S-Corp? Absolutely. In fact, most S-Corps are LLCs with an S-Corp tax election. You can form an LLC with your state, then file Form 255-3 to elect S-Corp status. This gives you legal flexibility and tax savings, the best of both worlds. Number 9, when should I restructure my business? Trigger points matter. If your income jumps, you bring on partners, you want to limit liability, or your tax bill starts hurting, it might be time to switch structures. Restructuring isn't just about taxes, it's about matching your entity to your growth and risk profile. Number 10, will an LLC protect my personal assets if I get sued? Only if you treat it like a real business. If you mix personal and business money, skip bookkeeping, and don't follow formalities, the protection can be pierced. You need to run your LLC clean, separate bank account, contracts in the LLC's name, and proper documentation. I hope this helps, and if there's a question that you want us to cover, be sure to save your spot for our next webinar on June 25th. See you soon.